Seemingly overnight, the internet is awash with news regarding a new unfair tax on mortgage borrowers with higher credit scores, and people are up in arms on this media clickbait. Some have gone as far as to suggest that someone could intentionally lower their credit score in order to get a better deal. But before you stop paying your bills in hopes of cashing in, let's separate fact from fiction. First and foremost, importantly, you will absolutely not get a better deal on your mortgage rate if your credit score is lower, period. Even if your baby mama's cousin just texted you a screenshot of a news headline saying 620 credit score gets a 1.75 discount and a 740 gets a 1% discount fee. So why would the media or your baby's mama's cousin make such a claim? This all has to do with changes to something called loan level price adjustments, known as LLPAs, imposed by Fannie Mae and Freddie Mac, the agencies, the two entities that guarantee a vast majority of new mortgages. So LLPAs are based on loan features such as your credit score, your loan to value ratio, purpose, purchase or refi, primary residence, second home, investment property. They've seen changes several times over the years. Fairly substantial change was just announced in January of this year, 2023. Wait, the news was from January? Why are people just now talking about it? People are confused because they don't understand how delivery dates work when it comes to Fannie Mae and Freddie Mac. Changes that impact fees or guidelines almost always get implemented based on the date the loan in question is delivered to Fannie Mae. Delivery in this context typically occurs a matter of weeks after the loan is closed, although it can be, more than a month. So now consider that a closed loan has often been quoted and locked for more than 3 weeks, call it a month to be safe. Since these changes go into effect on loans delivered on or after May 1st, 2023, lenders began to implement them weeks ago. Many lenders implemented them months ago, especially for loans that are locked for longer time periods. So low credit borrowers are already getting a discount while high credit borrowers pay more? Not exactly. And this is where the confusion comes in. Also, from here on out, please note that there's no opinion offered here as to whether this is good or bad, etc. The only goal is to clear up confusion and offer the facts. So the fact of the matter is that LLPAs are indeed changing in a way that improves costs for those with lower credit scores and increases costs for those with higher credit scores in many cases. But people are confusing the change for an actual cost. So a low credit borrower isn't paying less than a high credit borrower. The gap between what they pay is just smaller than what it was. Yes, again, all the value judgments and political commentary aside, the change amounts to a tweak of an existing fee structure in favor of those with lower credit scores and at the expense of those with higher credit scores. But there's no scenario where someone with a lower credit score will have a lower fee. In other words, don't go skipping those credit card payments in hopes of getting a lower rate. It's kind of annoying when these housing finance issues get highly politicized, and that's what the media's done here, and it just creates more division with this issue. The whole point of this was the Federal Housing Finance Agency was to just promote home ownership, for lower moderate income people, and that's it. That's the goal here, guys. So hope you found this helpful. Take care. Have a good one.